Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Gwen Preston, Vice President of Investor Relations with West Red Lake Goldmines. Trades on the TSX Venture Exchange with the ticker WRLG. How you doing today, Gwen?
I am doing very well, Keir. How are you?
Yeah, not too bad. So fast, the summer's just sort of passed us by. I was chatting to you just as it was getting started, and wham, it's sort of over. So I know you guys have had a lot of news out. Look forward to kind of catching up on what's new. Before we get into all that, let's get our 60-second pitch out of the way, if you don't mind.
Let's do it.
Question number one. What is the name and stock tickers of your company?
The company is West Red Lake Goldmines, and it trades on the Toronto Venture Exchange under WRLG and on the OTCQB under WRLGF.
What is the vision for the company?
The vision for the company is to put the Madsen gold mine in Red Lake, Ontario back into production. That's our near-term goal. We want to turn that mine on in 2025. And bigger picture, we want to use Madsen as our platform, as our first asset, as we look to grow a new mid-tier gold company.
How many shares are outstanding?
There are roughly 300 million shares issued and outstanding right now.
Who are some of your major shareholders?
The biggest individual shareholder is Mr. Frank Justra, who owns about 10% of the company. The biggest institutional shareholder is Sprott Resource Lending, who owns twice as much, owns just over 21% of the company. They are who we bought the Madsen mine from, and they have maintained their ownership in the asset since that purchase, since that deal was done. And we have several other, strong gold-focused institutions like Van Eck who have nice toeholds into our shares.
And if we talk about insider ownership, what would be the rough sort of percentage and how much money would they have invested?
Oh, I can't, I'd have to do some calculations to know the amount of money invested, but management and consultants own getting on for 5% of the company. And then, of course, Frank is an insider as well. So when you lump those together, it's about 15% of the company is held by management, advisors, and insiders.
Are you fully funded for the upcoming year?
So we are putting a mine back into production, and that costs a lot of money. We are working on accessing the last piece of capital that we need to accomplish that goal, and we expect to announce some progress on that maybe over the next sort of month or two, and that will be the last bit of money that we'll need to get the Madsen mine back into production. And our goal is for that to not be dilutive. Our goal is to make that a non-equity capital.
What are your short-term catalysts?
Short-term catalysts are plenty. So we're constantly drilling. So lots of infill drill results that are building confidence in the resource, that we're going to tap early in the mine plan. And then we are going to put out our pre-feasibility study, probably during the month of October. And that will be the blueprint for what this mine is going to be. It's a really important document to help the market understand, to fill in a bit of a black hole, which has been, how much more is it going to cost? When's it going to turn on? And what's the mine going to look like? We haven't put out that document yet because we only own the asset for a year. That document is coming out in the coming months. We're very excited to put that out so that everyone can get as excited as we are about this mine that we're pushing to put back into production.
Approximately, what is your market cap today?
$190 million Canadian.
Excellent. Thanks for going through that with me. Now let's sort of let's get in, getting into the nitty gritty. What's going on since we last spoke was about 3 months ago. Mm-hmm. I guess first one, how's the transition of the new role for you?
It's awesome. So I started with the company, I guess it's been 4 months now. Time flies when you're sort of as busy as we are, and busy in a really good way. There is so much happening with this company. Putting a mine into production requires so many layers of activity that there's a huge amount to understand. For someone in my position, there's a huge amount to understand. I need to be able to communicate with investors, potential investors, and community members about everything about the project. So for me to learn all of the different things that are happening, and then figure out all the different ways that I can work to communicate that to the market, all the different partners that we can work with for those communications. It's been phenomenal. It's been really exciting, and I'm pretty jazzed about what the next year is going to look like for the company.
So for those of my viewers that didn't know or don't know, you were a very famous newsletter writer that had spent about a decade writing about various other companies and sort of trying to keep them to task on delivering on what they said they were going to do, highlighting the ones that maybe investors should sort of have a look at who might be looking to speculate in the resource space. So you went from writing a lot about a lot of companies to now really being focused on one company. How's that sort of transition been for you?
It's actually an interesting question, because if you go back, I don't know, 3 or 4 years, if you had asked me, would you ever want to work for one company? My answer was no, I think I'd be bored focused on just one company. One of the things I loved about being a newsletter writer was keeping up with lots of different stories and sort of being able to focus on the exciting one of the moment. But I think two things. I really think West Red Lake Goldmines is exciting. And so that's filling that need for me easily. There's so much that's going on, and I think there's so much potential in this stock that I find it constantly exciting. And I think I personally was just ready for a transition from chasing literally 1,000 stories to try and find the exciting ones, to working with a team to do the most that we can with one that has good potential. It's been a great transition for me. I'm really happy to be focused.
So the summertime has not really been the time to put up your feet and sit back in the rocking chair. I've seen that you've been very busy doing lots of conferences and things. Any highlights for you for this summer? Events and things? Anything sort of interesting you can share with us?
Yeah, for sure. I would say going down, in terms of conferences, we went down to Rick Rule's event in Boca Raton, Florida. That was a great event. Just is such a really engaged group of, excuse me, resource investors. So lots of great conversations there. And that's when we were really pulling together our internal mine restart plan. So that was sort of happened to coincide with us being able to speak with a bit more confidence about just what we were doing, when we were going to do it, how much we were going to need. We weren't able to say those numbers out loud, but it gave us internally sort of the confidence to be able to frame our answers to those questions with a little bit more. So that was a really great trip. A few weeks later, we took our whole board of directors to the mine site. Another really important moment this summer, because we have a great board of directors, including Tony McCooch of Kirkland Lake Gold fame, deservedly fame, William Middlemiss, West Dome fame. There's guys on Q Agro, who is major with Kinross and is now with Revival. We've got a really strong board. And so having them come together, and we spent 2 very intense days going through everything that was happening at site and our entire restart plan. Like I said earlier, starting a mine requires so many layers of activity. There's so many needs that have to be addressed for a mine to be ready to go. We went through all of them, and it was a very intensive few days, but it was really gratifying at the end. Tony McCooch made a comment to Shane at the end. Tony was unbelievable. He was checking expiry dates on fire extinguishers underground. He was counting bolt spacing in headings. He was, talking about the details of like share issuance plans. Like he has built a major mining company, and he knows from the ground up. His attention to detail was unbelievable. And at the end, he's just commented, he's like, you guys are doing it. You're doing what you need to do. And it was so heartening. We know internally, but to hear it from someone like him felt really good. And so onwards. Now let's put that internal mine restart plan into an official document that we can talk about, and then make it happen.
Hey, good to hear. Thanks for covering a few of those. The Boca Raton trip sounded pretty fun from hearing from some other folk. Wasn't able to attend, but Rick's always got something interesting to say and brings an interesting group of people together for sure. Maybe we could talk a little bit about macro. You're a bit of a macro person. Maybe you could provide a bit of a macro update on the gold sector. It's been, some people are starting to sound smart out there. They've been calling it for years, and it's starting to happen. So,
I
what
love that,
trends and
Jeffrey. People are
observations?
starting to sound smart. If you wait long
Yeah,
enough, any prognosis comes true, right?
yeah, for sure. But what trends and observations are you seeing that investors should be aware of?
Yeah, so I think the key thing is I don't think there's been any seismic shifts in the gold rationale lately. It's just been evolving along its path. And so there's a few things. There's sort of the western and eastern sides of the gold story, right? One interesting thing is that through the summer, the eastern side, this particularly China, has been a bit quiet on the gold buying front, but we don't actually expect them to remain quiet. There's been some internal reasons why that they've been, in why they have or have not been buying gold, but we do expect them to come back and start buying gold again in the next little while, because their reasons for wanting gold instead of US dollars are not diminishing. They are only rising. So that really important force, that was the real force that drove gold, that maintained gold strength and drove it higher up to a few months ago. Really important force in the gold market. That's what kept gold strong despite the massive rate hike cycle that we went through. So that interesting timing that they kind of put a little bit of a pause on their gold buying, and it happened to coincide with the reality that rate cuts are coming in the Western market. And of course, rate cuts are the thing that reliably drive Western interest towards gold, because rate cuts usually mean economic slowdown. So they are the reason. If interest rates are going to go down, don't want to hold as many dollar investments. You look for an alternative. Gold is there. It also hedges the uncertainty that is involved in all of the things that lead us to that kind of a macro moment. And so, really interesting that timing lined up. And I think that that's why we've seen gold move in the last month. There wasn't one data point. There wasn't one event that drove gold above $2,500. It was just an accumulation of like, okay, now Western investors are starting to get interested, and okay, this is happening. And I like that that's the way it's been. If it's a spike to a higher level, then you're always a little wonder whether that's going to persist, whether it's going to last. But this is looking like a pretty robust moment above $2,500. And as we get into September, it's not if, turns out September will come. So as we get into September is reliably the strongest season for gold. If you just do historic looks at the pattern for gold annually, September is a great month for gold. We're likely to get that first rate cut in September. In fact, Powell has basically promised that we're going to get that rate cut in September. Maybe Chinese buying will return in September. Interesting possibilities, right? Who knows what's going to happen? But I think that there's quite a few levers that could well get pulled in gold's favor over the coming months. So yeah, I like it.
One of the other topics that we talked about on our last video about 3 months ago with you is you talked a little bit about cash flows for producers, about how they would improve, and you're looking for Q2 numbers, and you wanted to compare those to sort of year over year. Well, we've had Q2 numbers come out from some of the producers, and we've seen sort of year over year increases in their quarterly sort of free cash flow by upwards of 1,000% or more for some of them, like 1,000%. It's ridiculous. So you mentioned that's another point that's kind of come true for you. So can you speak to that, and do you think that's going to ignite any interest in the junior mining stocks, others that maybe are not major producers?
Yeah, so those, like you say, those results were unreal, as they should be given the gold price environment. And now that gold has moved higher again, assuming that we stay up here during Q3, like we should get that pattern repeat again in a couple months, right? And if that pattern repeats in a couple months and there's been a more sustained focus on gold in the Western investor arena, then maybe there'll be even better response to those really phenomenal numbers. Because at the end of the day, there's been some share price response to those really phenomenal numbers, but not what those of us in the gold market would want it to be. We would want to see better gains on those numbers. Of course, we still remain sort of stuck, to use that word, in this situation where, the S&P continues to do just fine. Like owning NVIDIA remains,
The most
a
obvious
good
trade
option.
ever. The most obvious trade ever. There's
Right?
nobody else that could own it.
Yeah.
But yeah, but yet it's still doing fine. So yeah.
Right. And until there's people reliably, so people can the investor market turns to gold when there's a specific desire to hedge. And that's, is there cracks in the stock market? Is there cracks in the economy? Do we want to do that? Or when there's just like a raging commodities market, and gold is part of a raging commodities market. And we're not in either of those situations right now. So we don't have those classic drivers to bring interest to gold stocks. We're seeing it in the metal, which is a great starting point, but we haven't seen it in the stocks. Now, through the fall, if there's rate cuts and, we're seeing signs of a slowing economy and whatnot. So is it coming? We can hope. We haven't really seen the interest trickle down into the juniors yet, have we? And I know I have a lot of friends in the junior mining space, and we all keep hoping that it will come down more. We chatted before, and I think we'll get to this question soon about there's been some more deals in the space, and that's a bit heartening for me, because I think deals can attract attention. So I remain optimistic, ever optimistic, that we are going to see more interest in mining companies through the fall, because there's just a lot of reason. And if we start to see some of those cracks in the bigger picture, in the investing theses that have just worked nonstop for a whole bunch of years, then the potential starts to sort of go through the roof.
Sounds good. So yeah, let's get into that next topic, sort of M&A. We just saw a pretty juicy deal being announced. So Cisco is going to be acquired in a over $2 billion all cash transaction. Pretty phenomenal. Those are like the ones we like to see. What does that sort of mean for the sector, and what does that mean for a company like West Red Lake?
So those are the two questions, right? So what it means for the sector is that it's a splashy number. Hopefully it grabs some attention. It's a big number. What I like for West Red Lake and for the sector is that it is yet another piece of evidence that major mining companies they have the money, they have reasonable share price strength, and they know that they need to buy assets. And so that's a combination. They've kind of known that they've needed to buy assets for a while, but maybe they didn't have enough money, or maybe all of those pieces hadn't come together. But now for a lot of the majors, all of those pieces have come together. And so they're like, okay, let's do this. And what are they trying to do? Well, they're trying to buy assets that can be put into production in a reasonably short time frame. And there just aren't that many of them out there. After a long bear market in gold, a lot of projects, slow progress. And so projects that have a chance of getting to production or even into construction in this gold market, the list is very short. And so as a West Red Lake representative and investor, that's a thesis that I really like, because I'm not saying that I think West Red Lake is going to get taken out by a major, but like it's absolutely a possibility, right? Because there just aren't very many gold projects. I mean, I don't actually know of another North American gold project that's going of any scale that's going into production in 2025. Globally, there are very few gold mines that are going into production in 2025. It's just, and even when you extend the timeline to 2026, there's hardly any, right? There just aren't very many development stage assets. So I think as a West Red Lake investor, I love this evidence that majors want near-term assets, and there's so few of them that they're going to pay for them when they decide to make a move.
Well, great. Thanks for covering that. I wanted to just touch on another point that you kind of have brought up, and I've seen some other videos that you've done, the Golden Runway and the Lausanne curve. So you mentioned the Golden Runway last time and how that relates to sort of West Red Lake. It's kind of the Golden Runway, as you call it, is referring to kind of the second ascent of the Lausanne curve. Maybe you could kind of just cover that concept again. Mm-hmm. I thought it was really brilliant. Maybe you could just sort of explain it and explain what it all means and explain how it relates to West Red Lake.
Absolutely. Yeah, thanks. So yeah, we know the Lausanne curve, right? Share prices go up when we get into that in that exciting discovery and then speculation about what a discovery might become phase. And that's understandable. People get really it's creating value where value did not previously exist by making a discovery, and then it's people getting excited about what that discovery might become. So that's the first value ascent when a project becomes a thing, right? And then you get into the doldrums. So you define your resource, or maybe you get to a PEA and people are like, woohoo, that's exciting. And then you have to really dig down into all of the work and time and money that is needed to turn a initial resource into a mine that can be built. And we know that that takes 10, 12 years minimum, with so many millions of dollars into drilling and permitting and engineering, and the permitting takes a very long time, and the market gets bored, and that's just a reality. The second part, so that's the up and the down, and then the Lausanne curve, of course, does its second ascent, and that second ascent is defined as starting at construction decision and then going all the way to production. And that also makes sense because you're going from spending the money and the time and not having cash flow if it's your first mine, which is construction, and you're transitioning dramatically into producing gold, and assuming that your mine makes sense, making money. So from spending money to making money, from not producing gold to producing gold. That's the second half of the Lausanne curve. And that applies probably most dramatically to a company putting their first gold mine into production, because it's like from zero to hero, right? It also applies, I would say, to companies where they're putting a mine into production that's significantly increasing their production profile. So like when I've invested in majors, or when I used to talk to my subscribers about investing in major mining companies, I would always say, well, look, if you want one that's got more leverage, instead of buying a basket or buying just Newmont, why don't you buy a company that's putting a major new gold mine in, like adding it to their stable, and then when they're seeing dramatic production growth, the market rewards that. I mean, the market rewards production growth or output growth in any arena, right? Once the capital that has been invested to create that end, then the market should reward your increased scale of business. And so that's what it is. It's the second half of the Lausanne curve, is that you spent the money, the time, you did all the work, and then the market should re-rate you for your increased scale of business. So that's what it is. And that's where West Red Lake is truly working on getting up that second half of the Lausanne curve. And I say working on because there is that bit of the market doesn't quite understand if we're on that curve yet. We do say, we're pushing towards restart in 2025, and that's very soon. So that should put us on the curve, but we absolutely understand that we haven't put out that study. We haven't explained exactly the timeline or the cost to get back into production, because we need to have that study in order to be able to talk about those numbers. And so we're pushing really hard to answer exactly those questions so that the market can understand that, yeah, we are on that second half of the Lausanne curve. We are going to be producing gold, assuming we attain all of our goals. We are going to be producing gold instead of only spending money, which is what we're doing right now, in 2025. And that should engender a new valuation for the company. And so that's truly the investment thesis for West Red Lake Gold right now.
Right. So you're spending money, you're building a mine, you're restarting a mine that somebody else had sort of put into initial sort of production rather poorly. You guys acquired it pennies on the dollar. You're taking a new approach to it, and we're within less than a year away from that first sort of initial commercial gold pour.
Yeah.
And then usually at that point in time is when you start getting a bunch of institutional investors, a new class of investor who might be looking at cash flow in a producing company, and that's where you get this sort of re-rate, the golden runway, as you've so eloquently put it. So maybe that's a good dovetail. Why don't you give us a bit of an update on what you guys are doing at West Red Lake? Maybe you could just talk briefly about the projects that you do have in the mine, and and then what work you have sort of going on. Would you mind providing us a bit of an update?
Yeah. How long have you got? I'm kidding. I'll keep it short, but there's so much going on that I could talk for a long time. Okay, so I'll start underground. We have 2 underground drill rigs turning 24 hours a day. We've completed 50,000 meters of infill drilling since we started that infill drilling effort back in October. And those drills basically won't ever stop turning, because the nature of a high-grade underground gold mine is that you're always drilling out the resources that you're trying to turn into reserves or mineable inventory. You're always working 6 to 24 months out and doing that work. So that's what we're doing. We're doing a lot of infill drilling. We're increasing the confidence in those resources to the level where our mining engineering team can then take those resources that we know have high confidence and literally engineer stopes around them, and then engineer how we're going to access those stopes, right? Stopes are the areas where you're actually doing the mining.
Right.
So, and then engineering. So you're building the mine plan. You're saying, here's exactly the areas that we're going to mine. Here's how we're going to engineer the tunnels so that we can get to those areas. Here's how we're going to make sure that here's how we're going to sequence it, how we're going to understand which areas we can mine at the same time and not have things getting in the way of each other. So that's the infill drilling and mine engineering process that is just it's a constant feedback process, and it just cycles every day. There's just more that goes into that cycle. So that's really ongoing. That data is, of course, going into, there's a cutoff date at some point, but that data has been informing this pre-feasibility study that will capture what the mine is going to look like based on the information that we have right now. We are expecting a pre-feasibility study mine plan that is not dramatically different than our predecessor had for this asset, because it was right sized. There was some issues in how it was executed, but it was the right sized mine plan. 70,000 ounces a year is certainly our estimate of what we're going to produce, and that matches in terms of the grade that's underground, and then our mill, which easily processes 800 tons per day. With our predecessor, certainly went up to 1,100 tons per day. So that sort of range is very much in our forecasts as well. So lots of underground work. We also have a surface drill rig turning that only started up about 2 weeks ago. That's pretty exciting because we have a great deposit at Austin, South Austin, those areas that are in the actual Madsen mine. Lots of areas that we can mine down there. There's 1.7 million ounces of indicated gold in those deposits. But what would highlight or sort of underline our thesis that Madsen has the potential to become more than a 60 or 70,000 ounce per year producer is to make a new discovery. I mean, we have the 8 zone at the bottom of the shaft. We're pretty excited about the opportunity to grow that and blend it into the mine plan at some point down the road. But we have the geology team did some cool work, just sort of step back look, and they noticed this very interesting periodicity of mineralization along the main Madsen trend. So it's about every kilometer, there's a particular splay that comes off, and that's where we have various deposits along that structure. And so there's been some new targets that we're looking at along there. So we're surface drilling at those targets. They, reformatted some of the data of some of the deposits that are down to the southwest of the main Austin deposit. Got some exciting targets there. That 8 zone, we have an upper 8 target. 8 zone is down at 1,300 meters. We have an upper 8 target that's only about 500 meters below surface, part of the same rock unit. We're testing that. So pretty interesting surface exploration, sort of discovery focused work going on the drilling front. Then there's lots of capital projects that are also going on, which we're doing to give our mine the best chance of, efficient, sustainable operations. So we're doing a tailings dam lift, and that is get that done so that we have 10 years of tailings storage facility capacity. Say that 10 times fast. Just ready to go before the mine even starts up. And so I just actually got some pictures from that progress this morning. It's looking really good. We are doing the connection drift, which is attaching to the 2 sides of this underground mine that actually weren't connected previously, which created some real inefficiencies in how ore could be moved out of the mine in the previous iterations. And so we're connecting those 2 sides of the mine. That's a $10 million capital project that's underway. We're working towards building a camp on site. We're working towards building a mine dry and a maintenance shop, and we're running propane systems through the site so that we aren't filling individual propane tanks at all of the different areas. We're receiving new equipment. A bunch of the equipment that was on site, I mean mining equipment that was on site when we acquired the Madsen asset, actually was either not in good shape or wasn't sufficient for the mine that we were looking at, that we wanted to produce, develop. So there's a bunch of new equipment that's showing up on site. So then you're, commissioning new equipment, whether it's a new ANFO truck. ANFO is like the truck that loads explosives into a mine heading, things like that. There's more, I'm sure. There's a lot of capital projects underway. But what's really exciting is that they're underway. These aren't ideas. These aren't things that we need to do in the future. They're happening right now. And that's why I think when we put out this study, there should be pretty limited capital cost outlined in that study, because we're spending the money now. Like, the money is already being put into the operation. So capital left to spend to put the mine into production is pretty modest. And then that means, because of the way that it's calculated, the rate of return for the asset, you calculate a rate of return with CapEx in the denominator. And so if the CapEx is very small, then you should have a pretty good rate of return. So we're optimistic that this feasibility study is going to outline an exciting mine,
Sure.
because of sort of the way that we've approached it, and because of the amount of activity that's happening on the ground right now.
No, this is being done a little bit unconventionally. If the mine hadn't already been started, and it was like a development stage, you would normally do like a pre-feas, and you get to like a bankable and
Yeah.
things like that. So you guys are in a bit of a unique situation in that it already sort of was in production and has already went through some of that stuff. So you guys are, reinterpreting it. So the document that you have coming out, that would have, you've referenced, is that a traditional pre-feasibility study, or is it more of a feasibility study?
It will be titled a pre-feasibility study because there have not previously been reserves defined on this project. But the level of engineering and cost accuracy that's going into it means that a lot of it is going to be along the lines of a feasibility study. I mean, imagine, so often in a pre-feasibility study, you have to be guessing about a lot of your costs. We're not
Right.
guessing about our costs at all. We are underground developing and test mining and drilling, and we know our costs very clearly. The mill operated not very long ago, so we're very familiar with what the costs are. So those aren't estimates, those are real costs. That's a big difference between a pre-feasibility study or any kind of feasibility, pre-feasibility that you can rely on, and one that you can't,
Sure.
is how accurate are the costs. And so that's one area. And then also, like, the level of mine engineering. Like I say, we have a stope book. We know which stopes we plan to mine over the first 2 years of the mine life. So, the level of engineering is also very high. So yes, it will be titled a pre-feasibility study, but in many respects, it will be similar to a feasibility study.
Any idea of when you think that document will be released to the public?
Yeah, so today's the 29th of August. I'm going to say definitely within 2 months.
And with that, will the company also be able to announce sort of an official mine restart date?
Yeah, that's a very good question. So, yes, we certainly plan to announce, once we have the pre-feasibility study out, we've addressed the questions that we haven't been able to answer with numbers until that study, including how much more money it's going to take to get us into comfortable production. Our goal is to get the pre-feasibility study out, announce that we have accessed that final piece of capital, and then also announce the official decision to restart the mine. And we want to sort of do that all in one fell swoop, three
Sure.
significant fell swoops, whatever you want to call that. We want to do that all in,
That'll be the sequence. That'll be
yeah,
the
that'll be the
sequence.
sequence. And it should be a pretty exciting sequence, because it's just like, here's all the questions will be answered, and then let's just go and do this.
Excellent. So we kind of you kind of briefly touched on it. Let's get into it a little bit more, if you wouldn't mind. Can you talk about cap structure? How many shares are out?
Yes, absolutely. So we
Your
have
favorite
200.
question. Your favorite question.
I know, my favorite question. I mean, fine. We have just about 300 million shares out. There are about 100 million warrants, so the fully diluted count is closer to 400. And some of the warrants trade. One interesting thing we've been seeing is the price of those tradable warrants has doubled in the last 2 months, which shows that there's pretty good interest in owning the opportunity to buy West Red Lake stock at $1. And an opportunity, at $1 sometime over the next 2.5 years. There's pretty good interest in owning that piece of paper, which is cool. We like to see that. So yeah, that's our share structure. And like I mentioned, this final piece of equity or final piece of capital that we need to access to build the mine, we really are trying to do that in a non-dilutive way. And when you're really close to turning a mine on, debt becomes an option. So there's several different debt structures, gold-related structures that we're looking at and that we're in advanced conversations on. So that is our plan, is to do it without equity, because we've done a lot of equity. We've raised $100 million and it's been mostly equity with some gold link notes in there, but they had warrants. So, we've done it with a lot of equity, and we know that our key shareholders are interested in us not diluting anymore. And so that's something that we want to do.
Excellent. So your shares are trading around 70 cents today. They've kind of been sort of held into a little bit of a range. I would surmise from my own, very humble opinion, they're probably being held back a little bit, wondering, well, how much more capital? When's the mine going to restart? The last guys had problems with it. Why are you guys going to be better and different? You've got a little bit of you got to prove it. What are your thoughts? After being in the seat here, in your role, and really looking to drive continued attention and making sure you talk to anybody that would invest in this sort of thing. What do you sort of agree about the shares? How do you think they're trading at a good price? What are your thoughts?
Yeah, so I am very aware. We here are all really aware that there's basically that a lot of investors fall into two camps. Once you talk to them about the West Red Lake investment thesis, they fall into two camps. Either they're interested, they're in, maybe they own, maybe you can get their attention, they like the thesis, they want to support, or they're familiar with the asset and the pure gold story, and they are in the okay, show me camp. So
Sure.
Instead of wanting to use the phrase that we used earlier, ride the golden runway, get in ahead of production, they're more interested in waiting to see that, we do a quarter or 2 quarters of producing what we say we're going to produce at the costs that we say we were going to produce at, before they might believe in our ability to run this asset better. And that's fair. I get it. When a mine fails, that hurts a lot of people. There was a lot of people that lost a lot of money. And so it's absolutely valid that there's people who aren't interested in owning the stock out because maybe they had that experience, unfortunately, or they watched others have that experience. I get it. So there's just two camps. And, right now we're doing as much as we can talking to those who are leaning into our team's experience at mine building and the
Sure.
risk mitigation efforts that we are doing based on that deep mine building experience. So there's a group of investors there that we're absolutely communicating with, and we're always looking to expand that group of investors. And then we want to keep those who are in the show me camp up to speed. We reach out to people like that all the time, and we tell them about, again, all of the risk mitigation efforts that we're doing, why we think we're going to be able to do a better job, and we'll just keep them appraised. And hopefully then if we are able to show them, then we will get returns on that. As for what the stock should be trading at right now, I would love it to be higher. We have some analyst coverage now. They have price targets that are certainly higher than our current share price is right now. But this is all part of it. Is the golden runway usually from construction decision to first pour? Sure. Is the fact that this mine failed 2 years ago, does that mean that our golden runway might shift as some of that show me camp gets on board a bit later in the process? I think that's really possible. So maybe ours is more from 6 months before production to a year after production. I think that's sort of how I wrap my head around
Right.
how these two camps could come to play in our share price.
So for those of the viewers that want to get into, you did a really great job last time we chatted of explaining kind of what was done previously by Pure Gold and then what specifically you guys are doing different. But while we've got you, would you mind just maybe explaining one or two things that you're doing differently in your approach to mining versus what was done before that might result in better economics?
Absolutely. So, I mean, the key from the beginning, the fundamental component of our approach to restarting the Madsen mine has been infill drilling. And then using that infill drilling to build a really confident, accurate resource model onto which we can build, a mine plan that has lots of optionality and covers 18 months to 2 years of operation. Let me just unpack what I just said a bit because there was a lot in there. So infill drilling, the way I like to explain it is Pure Gold made their construction decision based on a resource model that was, a resource envelope that was like this, a pretty continuous line of mineralization, package of mineralization. As they progressed, they realized that needed to be redone to some extent. So they redid the resource, and it incorporated the folding in the rocks better. And it was sort of a mineralized envelope that did this. To generalize or to simplify, their approach was then mostly to mine that entire mineralized envelope. And they did that because they had not done enough infill drilling. Their spacing was maybe 20, 25 meter spacing, drill spacing. And so with spacing that wide, they did not have resolution on exactly where the gold was within that mineralized envelope. By infill, and when you mine the whole envelope, but actually the gold exists in sort of a lens here and a lens there and a lens there, then you end up diluting those lenses of mineralization by taking the part of the mineralized envelope that doesn't actually have mineralization in it, right? It's the package. The gold is within the package, but the whole package isn't mineralized. The premise of infill drilling is to define the lenses, right? And so we then can mine better. We can focus our mining on where the gold actually is. And so that is the first thing that we really started doing once we got on deep into the Madsen project and operational. First thing we did was start infill drilling, and we haven't stopped. And so that is the fundamental difference in the approach, is that we believe that we have a much better hold on where the gold is because of all of this infill drilling. We're down to 6 meter spacing, 25 versus 6. That's the kind of difference. So we really believe that we have a better hold on where the gold is. And because we've had this lead time and all of this data coming in, we have, like I say, built up a stope book, built up an engineered mine plan that covers a significant chunk of maybe 2 years of operation. That's really important too, because then you're not scrambling to figure out where you're going to mine. You have those areas defined and engineered. You don't end up driving a tunnel that ends up being awkward for an area that you end up wanting to mine. You think ahead about these things. And to Pure Gold's credit, near the end, in the last 6 months of their operations, they did realize for sure that this was where their weakness lay. They brought some really good people in, and they started doing exactly what we're doing, but it was just too little too late. They were scrambling to create those engineered mine plans based on the infill drilling that they were just rushing to do. So it just didn't quite happen soon enough for them, but that's truly been the premise. There's lots of other capital projects that we're doing, like that connection drift to connect the two sides of the mine, that we think will help bring the costs down. Because their problem, again, to simplify, was that the grades were too low and their costs were too high. And so we certainly are working on the grades by having a better engineered mine with a more confident resource model with lots of infill drilling. And we're working on the costs through some of these capital projects like the connection drift that should make our mining more efficient. So that's the premise of the approach.
Excellent. Well, you've got a future in politics. Very political answer. Thank you. But I think people get the gist of it. So if I was to surmise, Pure Gold thought their actual mine grade was going to be quite a bit higher than what they actually encountered once they started moving rock.
Yeah.
And then also, I think you mentioned before, there was some equipment that they leased, and also with this sort of portal or the way, connecting the two sides, they'd have to have trucks going in and out of the same opening, whereas you guys are able to just have the trucks go in one end and come out the other, and it makes it a lot more efficient. Is that is
Yeah.
that uh,
Yeah.
is that a,
Yeah. The
is that
efficiency,
an overall simplification of what you said?
yeah, that works for sure. There was some cost issues for sure around how they procure, and COVID didn't help. Let's be very clear.
Sure.
There may have been things that they wanted to buy that they were unable to
Right.
buy because of COVID. So they ended up sort of having to take this in lieu of this thing that they really wanted.
Yeah.
And then the thing that they really wanted became available. So then they ended up doubling, and like
Sure.
COVID made it a lot harder. But yes, they ended up with equipment procurement inefficiencies. Let's call it that added to their cost structure for sure. And then like not spending the money to drive that connection between the two sides of the mine were definitely, they were taking their ore out of the west portal, which then you have to cross two public roads and drive past a town. It means you have to change the ore to a different kind of truck. You don't like to drop your ore and pick it back up. That's like a cardinal sin in mining if you can
Sure.
avoid it. They could only cross the roads in daylight hours because of the town and the noise restrictions. So there was lots of reasons why that ore moving system was inefficient and added cost. And so the connection drift addresses that. We can take things out of the east portal instead, which is right beside the crushers. And it's a bigger portal too, and we should be able to use larger trucks. Larger trucks are more efficient. Like we have the option to do 60-ton trucks instead of 30-ton trucks. So, right, this is just setting us up for hopefully success by creating a more efficiently engineered mine.
Excellent. Well, I wish you good luck with that pre-fees coming out in the next couple of months.
Thank you.
That's going to be quite a document to read. I'm sure there's going to be a lot of eager eyeballs looking to read that over and have an opinion. So you'll be busy.
Yes.
Now, in terms of your investor relations strategy, what you thought the job is, what you've brought to it. Maybe you could explain a little bit about some of the initiatives that you're doing to attract, and retain investor interest in the company.
Yeah, for sure. We're doing a lot of outreach now, like call it picking up the phone, because we do think that there is this rising interest from from generalist investors looking for, okay, how do I position in gold? And within that, our slogan that we're evolving, that we've developed is mining done differently. And what we're getting at with that slogan for West Red Lake is that West Red Lake is focused on shareholder returns. And that sounds simple, but in the last gold bull market, that was not the focus. Mining companies were focused on production growth. That was truly how things went badly in the last gold bull market. Companies were focused on increasing production for the sake of increasing production, and they didn't focus on shareholder returns. And that means that even though gold did very well, and even though gold has done phenomenally well over, call it, the last 10 or 15 years, gold investors in gold equities have not had very many opportunities to really cash in. And so we want to structure a gold company that gives investors leverage to the gold price again. The concept is supposed to be that when gold rises 5%, a gold equity should rise 15%, because hopefully your costs are remaining just about stable. So then the increase in the gold price just goes to profit. And that's why leverage should exist in gold stocks. But because of growing production for production's sake, and then therefore having lots of additional capital costs that are eating away at that profit, that's not really what happened. We still want to do aggressive growth, but we want to approach aggressive growth in a different way. We want to acquire assets that make sense, that can be brought to production quickly, which has been another big drag on gold stocks, is the fact that it takes however long, decades, to put a gold mine into production. We are a fix-it team. We are a team that can go in and take an asset like Madsen and turn it around, because we've built mines before, we know how to do it, and we can right-size the operation and make it work. And so we want to go in and find assets that can be put back into production quickly or improved with this sort of fix-it team approach. We want to grow quickly, but underneath it all, we want to be underpinned by good relationships with the communities in which we work and a focus on shareholder returns. And so we can do that with expertise, access to capital, and good decisions on how to grow. We want to be mining done differently. We want to give investors the opportunity to get leverage to the price of gold, and that underpins our marketing right now. In terms of actual initiatives, oh my goodness, we're doing lots. We do lots of marketing. There's so many different audiences to try and reach, and different stories that are different ways of telling the story that are appropriate to all of those different audiences. So we're doing all of that work.
Sure.
Yeah.
How many formal analysts now cover the company? You mentioned you picked up a couple of new ones. How many analysts now cover?
Yeah, we have 3 analysts. So we have Raymond James, we have Cantor Fitzgerald, and we have Red Cloud that all cover the company. And I'm working hard to maybe add 1 or 2 with the pre-feasibility study, because there's certainly some analysts who want to have that document. So yeah, I'm optimistic that I'll be able to increase that count before the end of the year. That's my job.
Are you heading to Beaver Creek?
The team is heading to Beaver Creek. I actually am not, just as it turns out. It's there's lots of conferences, so you have to divide and conquer. But Shane Williams will be there. Vice President of Exploration Will Robinson will be here, and then our Corporate Development Vice President Jason Billen will also be there. I've been building their schedule. It's going to be busy down there. So yeah, absolutely a presence.
Okay, excellent. Any sort of final insights, any final thoughts that you'd like to leave us with that we haven't covered so far?
This has been a great conversation. I don't think there's a lot. Yeah, we're really excited. We're working very hard. There's a lot of layers of things that have to happen, and we are working just as fast as we can to get those done. It's a complicated enterprise. We're really excited about it. The team on site is like 140 people employed at the Madsen mine site right now. This is a very real operation happening down there, and we're excited to get that pre-feasibility study out, access that last piece of capital, and then really be able to talk about everything that we're doing and get the market hopefully somewhere near as excited as we are about the realness of this return to production at the Madsen mine.
Hey, excellent. Well, I really thank you for your time. It was great to catch up. I see that you've hit full stride in the new role and bringing some great energy to it. So thank you. I really appreciate it. Look forward to catching up with you here in a couple of months. Sounds like probably next time we talk, you'll have your pre-fees out and we can sort of go through that from top to bottom.
That sounds like a great plan. I look forward to it. Let's put it in the calendar for November. Let's talk again. And thank you so much for having me. This was a really great conversation.
Thank you. Thanks, Gwen. Have a great day.